Happy Friday, everybody. Welcome back to the weekly market analysis for the week ending December 15th, 2023. We are just a few weeks away from the end of 2023 Q4, and this will be the last video for the year, and so we will not be having any more videos on this channel for the last 2 weeks. So December 22nd and December 29th, there will be no videos. So we'll be coming back at you at the very beginning of January. So if I don't remember to say it before the video is over, I hope you guys all have a wonderful holiday with your family and friends, and hope you finish out the year strong. I want to take a minute to remind you to hit the like button and subscribe to this channel if you have not already. You can also find me on Twitter at Mr. J. Thomason. I post a lot of insights and things I'm thinking about in markets on a daily basis. And you can also follow my Substack at befinanciallyfree.substack.com. Last week I unveiled some new positioning charts that are reserved for premium subscribers. So if that's something you're interested in, the first half of the newsletter is free, so you can just sign up and be a free subscriber, and you'll get the newsletter delivered to you, and you can see the first half of it absolutely free. And then for those who subscribe to the premium, you'll be able to see the positioning charts and all of the other quantitative analysis that I do on a weekly basis and that I refresh on a weekly basis. And so if that's something you're interested in, you can hit the subscribe, or you can subscribe to that. And the links to both my Twitter and my Substack are in the description of the video below. So the question that I'm thinking about here as we go into, or as we finish the second full week of trading in December, is, are we going to get a little bit of a pullback here? Where do things line up? Or is the Santa Claus rally, which, I mean, frankly, has already been going, something like it, but technically the Santa Claus rally, which is essentially from around Christmas time, specifically through the end of the year and into January, is that on tap? Is that already happening? Are we going to get a pullback? If so, what kind of pullback will we be getting? And I think, just to kind of give you my thesis from the start, there's a lot of things right now that are lined up in such a way that it would not surprise me to see prices come off. If we're talking S&P handles, maybe 100, 150 S&P handles. So, I mean, a decent sized pullback, but not anything to write home about, not anything that's going to start, getting us to talk about crashes. I think that's the most likely option. There's a lot of analysis that you can find, from different guys, different macro people, people who are in the options space and so on, who can talk much more at length about how different dynamics relating to flows and things like that are going to potentially be fuel for a rally to continue. So, obviously they have been in the business a long time and they're big time experts. I just look at charts and look at a few other things. So you got to take it for what it's worth. But my suspicion here is that we are going to get a little bit of a pullback, but I can't say that I have a lot of conviction that there's going to be much more than that as far as pullbacks go, and that largely the movement is probably going to continue to the upside. If I had to tell you 30 days from now, do I think markets are higher at the same spot or lower, then I would say higher. But if you asked me, okay, in the next 5 days, do I think markets are going to be higher or lower, I would probably say maybe unchanged or lower. And so let me just kind of go through the reasons why for that. If you look here on the S&P chart, it's pretty wild to think that since that last trading day of October, or I'm sorry, that last Friday of October till now, we're up 15%, 34 trading days, 49 calendar days. It's wild. And of course, I've tweeted a few things that I have put on my newsletter at different points of the year, and one of the things that I talked about was how we were going to, at some point, I thought it was going to be like earlier in the summer, but I had thought that at some point during the summer we'd get a pullback, that the pullback would have people thinking that this was, the collapse going into a recession and, credit cycle downturn, and then, but it wasn't going to be, and then all the shorts were going to be fuel for a rally that was probably going to go to all-time highs. And of course, you can never be certain of the timing, not only of when things are going to happen, but then how long things are going to take to unfold following that. And of course, that it took a while to get the pullback. We got almost 10% or about 10%, but then the takeoff since then has just been incredible. A lot of people have thought that the moves in 2023 up till the summer pullback were huge, and we got, like I said, we got 15% in less than 2 calendar months. But if you think about where things are at right now, if you just kind of pull back, we're right here, kind of almost. I don't want to use the word. I mean, I'm using the word double top, but I'm not saying that it's going to crash down. But it is interesting to note that we are currently at levels around, at least in futures, we're at levels around the previous all-time highs. If you go to the same place on the NASDAQ, we've already achieved a new all-time high, closing all-time high in the NASDAQ futures. The Russell, not even close to highs. The Russell is actually probably about halfway between its old all-time highs and then the lows that we've established over the last year and a half or so. Halfway through there, got kind of rejected. That's something I'll talk about shortly. And then the Dow, also brand new all-time highs in terms of like the futures. So equities are strong. Now, why would I say that? I think if you're asking me over the next 5 days, which obviously like no one knows, but if you're asking me over the next 5 days why a pullback, if you take your chart and you pull up, say, an RSI. Then one of the things that you could note is the extreme. I'm trying to get rid of the other line here. Is the extreme overboughtness of this market. We had an RSI touch 80, we had the S&P RSI touch 80. I think it was yesterday. Let's see. Yeah, yesterday. We had. It was pretty outrageous. If you put in, SPHB. We got a level, what was it? It was 85. And I looked, SPHB has never achieved that level of overbought on the RSI. So it's been pretty remarkable. There's just been a lot of unprecedented price behavior. So I've been going back and looking at different correlations and relationships and stuff like that. I mean, the number of times that we've seen RSIs at these levels on a lot of like the equity index style factors and sectors at these levels, it's almost never happened. And in some cases, like I said, it's never happened. If you look at XHB, which is the home builders, I'm going to have to actually look at this one. Yesterday's RSI was 87. So just really incredible price action, incredible strength. And so all that is to say, if we're talking about someone who has, is neutral in the market, meaning that they're not in the market at all, they don't have a long, they don't have a short, and they're looking at price, kind of running away, it's an interesting mix of psychology here and risk to reward, because you could make the case that at this point there's a lot of people that are thinking, wow, this is going to go up forever. I'm going to miss out if I don't get in, so I just got to get in. So you could make the case that there's maybe some room for for continued overbought action, because it is true that markets can stay overbought for a significant period of time. I mean, if you want to go back to the period of time in 2020, obviously conditions were different. But we had an RSI over 70 for something like 2 whole weeks before it came off. And obviously there's plenty of periods of time where the RSIs can go to overbought, and price can still grind to the upside. So it's definitely possible. So you have to counterbalance that with the fact that eventually this has to come off. It has to either go sideways for a while, or it has to come down. And at what point do you want to be the buyer? where do you want to risk being the buyer at? The risk to reward in the immediate, like near term, next 5 days is not good. I mean, the probabilities, I've done some back testing on this. The probabilities here, I mean, you're looking at 60% probability of downside across all markets, and that's an average as far as equities are concerned across multiple different sectors and style factors and indices. So the odds are, and maybe 60% doesn't sound great, but we're talking about across time averages that are kind of between 55 and 65, teetering back and forth in terms of percentages when the RSIs are not overbought. So statistically speaking, you're looking at pretty good odds of this coming off when you think about it from an RSI perspective. So that's one thing that I would bring up. Another thing that I would bring up is the AAII survey, and of course sentiment doesn't necessarily mean everything, but maybe I'll use the bar chart because it kind of puts it into perspective better. For me, it's not necessarily just the level or the percentile ranking, it's the change or the move in some of these. So, the bulls sentiment went from 83rd to 91st percentile, 8% change. The bearish went from 40% to 9%, so a 31 percentile change. The spread between bulls and bears went from 77% to 92%, so 25 percentile change. So these are the significance of that move to me suggests a lot of excitement and exuberance. And what's pretty interesting too is if you want to go to the bull bear spread, we are above the level that we were at the late July peak, and and it's not to say that the bulls bears spread can't be this level and price still go up, because it was like that in 2021 on a couple of occasions, up well over the place where you want to be concerned that everybody's too bullish, right? So it's not a guarantee, but it's not really about finding one metric that tells you the story that you want. It's about trying to put together a lot of different data points that are all and asking yourself, okay, what does the range of data say about what's coming? And so I think that's another reason why. And then if let me go really quickly to another chart that I have gone to a bunch of times, is my stocks above the 50-day moving average. And one of the things that you watch for a lot of times is does that number go above 90? And yesterday it did. Yesterday on the highs it was above the 90 level. So that's usually a signal that says, hey, a near-term reversal can be commencing. And so that's one of the things I'm watching for. I mean, and it has, like, when it's been basically above 88, when it's at least been above 88 for a period of time, the last 3 times before now, price pulled back. And 2 of those were during the bear market, and then the other one was, ahead of the 10% correction that we just had this summer. So this is another signal that is telling me that we are going to be pulling back, or potentially going to be pulling back, right? So then, we've had also some pretty substantial moves in treasury yields. This kind of like washed down the last couple of days on the whole Fed pivot narrative. To me is, and I'm not saying, I'm not here to tell you that yields are going to go up over 5% again, but this kind of move has to get checked at some point. If you want to look at it through bond futures, so if we just look at the 10-year note futures, it's been a pretty wild move to the upside. So you can actually see the triangle, the reversal signal. So I would be watching for this to come down a little bit. I don't know how much, but of course, increasing yields is going to put some pressure on risk assets. So that's something to consider. And then if you want to also look at the dollar, the U.S. dollar, the U.S. dollar also had a little bit of a wash down, or washout, I should say. And so I'm interested in seeing kind of, let me actually put an RSI up here just to get an idea of kind of where things are at. We actually look at, if you see here on the bottom of the screen, you can see we have a divergence, right? The price made a lower low, but the RSI did not make a lower low despite the action. And so I would be looking for that to reverse, right? And then to go back to equities just for another quick moment. If you put a MACD as well on the S&P futures, let me get rid of the RSI. So not only is the RSI overbought, but if I drag this up, you can see a clear MACD divergence here on the histogram. So this the histogram today closed at a lower level than yesterday after a clearly having a higher histogram previously, and this is on the daily chart. We didn't quite get that on the NASDAQ, but I'm wondering if we do get that going into next week on a particular day. And not even just that it's on the daily chart, but it's also on the weekly chart. And weeklies are much stronger often. So like if you look back, like think about this. And this is actually the thing that is most concerning. Maybe if you're thinking more medium term, and again, I'm not saying that price must go down or be lower 30 days from now, but I would say this, like if you look back on the NASDAQ, when you get to kind of the lows, from October of last year, which is where the crosshair is right now, one of the things that you notice is the MACD histogram makes a higher low while price made the lower low. So there's the divergence on the histogram, but then also the actual lines themselves made a higher low. And so that was a pretty good signal confirming from both that this was prone to reversal, and it did, right? So now if you look here at what we have the histogram making a lower high, but price making a higher high, and this is all while the lines are also lower. So if this blue line or if these lines start to curl over before they get up higher, then watch out, right? That could mean that the same kind of development that happened during the bear market is about to happen again. So that's going to be something to keep track of. And the same thing is happening on equities. Barely this week's MACD histogram barely closing lower than we had back in July. But the same kind of divergence is potentially going to be playing out here. So both on the more immediate term and on the medium term, that's something that also is concerning. And then the other thing I wanted to mention is that a lot of people have been talking about, I got to put the correct chart back up here, is the VIX. And let me get rid of the MACD here. The VIX was down, but then also the S&P was down, which is really interesting. And yesterday the VIX was up, despite the fact that the S&P was up. And so volatility is super low. Just a caveat here, like volatility can be below this level. It basically was for most of 2017 and into early 2018 before taking off. But it's not the likelihood of it moving significantly lower is small, and the probability of expanding volatility is actually relatively high. And so for that reason also I would suspect that it's possible that if the VIX starts moving up, then that will affect definitely funds that who buy and sell based on where the VIX is at, and increasing volatility can have that kind of ripple effect or self-fulfilling prophecy on equities as well. So that's kind of what's going on with equities. So I suspect a pullback is coming. Interestingly, let me go to Bitcoin really quick. I know that one gets talked about a lot. Bitcoin is kind of in a process of consolidation right now. It's come up pretty hard, not all 2023, but then especially over the last few months, just like all the other risk assets. So don't be surprised. Across Bitcoin in its bull market periods, it can see plenty of 30 and 40% pullbacks. I'm not calling for that, but just be prepared for those kinds of things to be normal. For me, we're going to come back to gold here because it's really funny. Back here on November 29th, I asked, at the end of 2023, do you think gold is going to be higher or lower? Most people picked higher. It's really funny because yesterday we were almost at unchanged, or we were at about unchanged for a period of the day since then. And what was funny is we went more than 100 points higher and about 100 points lower, or almost 100 points lower. So it's pretty wild. One of the things that I would say here that I've said on Twitter is that, people talking about a soft landing, that growth won't actually collapse and that the Fed will be able to cut rates. People are saying, oh, Fed cutting rates is going to be good for gold. But if it's a soft landing and growth is fine, then gold has no reason to go up despite the fact that rates may be coming down, right? Because the part of the I know that the interest rates started to kind of come up off zero across 2020 and 2021, right? But it was also because growth was so high. Growth was off the charts during these periods of time. So that's part of the reason why gold stays down. So I don't personally think a soft landing is good for gold, and I don't, I think I'm kind of lonely out on that limb right now, but that's kind of where I think, and I'm not saying gold's going to go like straight down here, or that it's going to stay sideways. I mean, it could just go up over time, but I don't really think that there's a huge, benefit to longing gold at this particular moment in time, just given kind of where things are at in the economy. So anyway, I think that's where I'm going to cut it off today. Again, no video next week. Be careful trading the last 2 weeks of the year because it's pretty light. Usually there's not a lot of volume, and so things can move pretty rapidly one direction or the other. So just be aware of that, and take caution, and maybe go flat or hedge your positions, whatever they are, and go enjoy time with your family. So I will see you on the other side of the new year in 2024. Best of luck to you the next couple weeks. Have a great weekend and a great holiday with your family and friends.